Edward Stevenson, TimelessWealth.net, and the following is technical analysis on the Jolla Pharmaceutical Company, stock symbol LJPC. Ending Tuesday's trading session, shares of the Jolla Pharmaceutical Company closed up nearly 31% to end the session at 16 cents per share. Following a move like this, the number one question I get is, how do I predict this? How do I get in before this type of move happens? And the answer is quite simple. Let's just take this low right here at 10 cents per share, made in late January, early February, and the low coming off of both Friday and Monday's trading sessions, also 10 cents per share. Accordingly, you have a chart pattern known as the double bottom, and this suggests that the market will reverse trend. So assuming this was a downtrend or a sideways channel, we know that the price broke out, first, let's say, a bottom at 10 cents per share and then began to move off of that bottom. I'm not going to go into great detail, but do know that the way to play these in general is to scan for these type of chart patterns and then throw these on your watch list. And we'll take a look at what to look for in terms of buying signals. So coming off of Monday's trading session, we had resistance at 13 cents per share, and that just dates back to this area right here, this gap down, as well as this area here. So as you can see, at one point in time or another, this trading session, which looks like early December, the price rallied substantially on high volume. These bars right here represent the volume, and it closed at 13 cents per share. So what happened afterwards was, once the price broke above 13 cents per share, so the trading session that followed, the price rallied almost to 32 cents per share in 3 trading sessions. So 13 cents per share dates back to historically being resistance. Not only that, but after it pulled back from 32 or so, it pulled back to 13 and tested that breakout trend line. Once more over here, even though it never touched it, it did pull back, and this served as support. It once again became resistance back in this area here, and especially this area here. So it would have formed a sideways channel based on these trading sessions here, where the price struggled to break above it, had done so once here, looks like it gapped up, opened higher, but again closed below resistance. In any case, 13 cents per share, that looks like the primary buying signal on the Jolla Pharmaceutical Company. The secondary buying signal, the one that caught my eye, was 14 cents per share, and I'll explain why in a minute. So seeing how the price broke past 13 cents per share, this once resisting trend line once again becomes support, agreeing with this period right here and what we saw back in early December. 14 cents per share. First of all, it supported the price right around this retracement period or pullback in the market. Second of all, it supported the price right up until this period right here where the market broke down below this one supporting trend line. So it would have looked like this. Now we're indicating red to represent resistance, and this, in my opinion, forms that sideways channel that I was referring to in the month of February. So what I was looking for in the marketplace was a break above 14 cents per share, meaning I wanted to see 14 cents on the bid and above average volume agreeing with the technical breakout. If I don't see the volume, it's not a breakout on strength. The volume has to look something like this or like this for there to be strength in the market. And as you can see, whenever we see above average volume in this market, in Jolla Pharmaceutical's market, it is always succeeded by further price appreciation. For instance, this trading session right here followed by this one. This right here would have been above average volume, was succeeded by even greater volume here, where the stock peaked at nearly 26.5 cents per share. In addition, the break above 14 cents, I believe it sent parabolic SAR, these trending white dots right here, underneath the candles, and now this suggests a bullish market is in effect. This would have been considered a bearish signal. Not to mention the fact that another resisting level, 15 cents per share, or the 50-day simple moving average, this red line, represented resistance following Tuesday's trading session where the price closed at 16. 15 cents per share is also another supporting level. So we'll just indicate this with a dash line to represent slight resistance, but the key one and we're just going to make that green because the price did break above it, and now this is a supporting level. The key one in my opinion is 14 cents per share. Furthermore, what I use on the daily chart and actually in the intraday charts to be more specific are technical indicators, and these are secondary to what I see is going on with the price and volume. MACD, we have a bullish crossover. The relative strength index, all of these periods right here, the 5, the 10, 21 have crossed above 50, which is a bullish signal. So they are in the what's known as a power zone, at least that's the way I like to look at it. Bullish crossover on the ADX, as well as full stochastics coming off a bottom. It almost appeared as if it was oversold or drifting below the 20 level, but it bounced off nicely. And what I like to see here is a cross above the 50 line. And of course we have money flow index, and this is a great swing trading indicator, and it basically shows us that the right type of money is coming into the market. Smart money, money from the long side. So longs are attracted to this market for one reason or another. It might be technical, might be fundamental, I'm not sure, but I do like the relationship between price and volume, and that's what's attracted me to this market. On the flip side, we have resistance at 18 cents per share, or the 200-day simple moving average. Now this would be quite a key one because the 200-day simple moving average is in general considered a long-term resisting trend line. Therefore it's imperative that the price breaks above it in order to continue some sort of uptrend. I'm not saying that would occur following trading session or trading session even after that, but at some point in time we'd like to see 18 cents per share fall, especially if you're along on this market. Following 18 cents per share, we have resistance, slight resistance at 19 cents per share, just based on the high coming off Tuesday's trading session, the high that the price was not able to surpass, following which 20 would probably serve as the next critical resisting level. The reason being is partly based on this being a resisting and supporting level historically, so this channel right here would have served as resistance, here's support for a few trading sessions. But more importantly, the fact that 20 cents per share is the double from 10 cents per share, which is going to be psychological resistance, if you will. That's probably the best way to put it. And they're going to be sellers at this point based on that theory. Now I know it may sound like I'm making notes at just about every interval, 10, 11 cents, 13, 16, 18, 20. But in reality, you have to consider the fact that the market trades at 16 cents per share, and a move from 16 to 20, for instance, would be 25% increase or gain in the marketplace. So in actuality, we're looking at a very volatile market, and that's what you got to keep in mind. So all these levels are critical. I'm not just coming up with them. They are based on historical price movements, which is essentially the foundation of technical analysis. So again, the key levels to keep in mind are 20 and 18 cents as resistance, 15, 14, and 13 cents as support, as well as parabolic SAR trending at 10 cents per share. And more importantly, look for strong volume on any price appreciation, and in the event the market pulls back or consolidates, look for below average volume or a decrease in volume, which would be ideal. Once again, this was Edward Stevenson with TimelessWealth.net. I encourage you to visit my site and join our free newsletter for overlooked trading and undervalued investment ideas. If you visit TimelessWealth.net, you'll have access to all sorts of educational materials, articles and publications, and the latest trends and topics in the marketplace. So definitely worth checking out. Once again, it's TimelessWealth.net. Thank you for listening.